Dear participants, welcome back to part 2 of this S4HANA Cloud Day for Finance and Risk at the Delta training. My name is Katrin Deisner and I'm a product manager for S4HANA and part of the S4HANA PSCC enablement team. And I have the pleasure today to co-moderate this Finance and Risk Day for S4HANA Cloud together with my teammate Ulrich Hauke. And before we start with the actual session, I wanted to make some housekeeping remarks up front. So please be aware that the session is being recorded. If you're interested in the recording, it will be made available on the landing page after the training. So the idea is that if you wish to hand in questions to our speakers, we would kindly ask you to make use of the Q&A function at the bottom of the screen. Please do not use the chat function, so Q&A would be the place to do that. Our speakers will answer your questions via the Q&A tool after they have finished their presentations and demos. And if time permits, we might take questions live, but yeah, we expect that the majority of questions will be answered via the Q&A. Yeah, let's take a quick look at the agenda again. So as you're well aware, this Finance and GRC Day consists of different slots. So the first session today took place just before this one. If you have missed it, you would still have the opportunity to watch the recording after the training. In the first slot, we had the update on management accounting and margin analysis presented by Janet, the update on credit management with Viktor Kinsvater, as well as the update on accounting and financial close presented by Donatella and Uli. If you're interested in the content but couldn't join, please refer to the recording. In this session, we will start off with the update on group reporting presented by Philip, followed by what is new with revenue and cost accounting, which will be illustrated by Chen Shu and Volkmar. And in the last presentation of this slot, Holger Faber will give an update on integrated financial planning. After lunch, we will then have the third slot of the day with an update in Treasury, Risk and Cash presented by Jürgen Jensen and William Cow. Next, we will have Tom Anderson illustrating one of the highlights of this release, the update regarding real estate and leasing. And after that, we will jump into the GRC side of the house with the update for financial compliance management, which will be brought to you by Alain Briogal and myself. And last but certainly not least in this slot, we will have then Christian Stadler, who will present the latest news regarding international trade. In the fourth part of this Finance and Risk Day, we will have an update on privacy governance with Dominique Schwartz, an update on document compliance with Erika Bouzon, and the last session of the day will be run by Sharma Aditya, who will let us know what is new with regard to identity access governance. Yeah, and now I would like to hand over to the first speaker of this part 2, and this is Philip Aliban from Solution Management with the update on group reporting. Philip, over to you.
Yeah, thanks very much, Katrin. Excellent. So thank you everybody for joining this session. So I'm going to be talking for 30 minutes on the updates in S4HANA group reporting. So that's really our strategic consolation solution. I'm working in solution management as the solution owner of S4HANA group reporting. So working very closely with development as they sort of further evolve the solution. So what I want to do today is just maybe cover 4 new functionalities that we've actually recently shipped in the S4HANA Cloud 2108 release, and they'll be also planned for the 2021 on-prem shipment. So some key functionalities that we're providing. I think you'll see that extensibility of financial statement attributes is really powerful functionality that's extending the reach of our solution. Inter-unit elimination of profit in inventory is something that a lot of our manufacturing customers have been asking for. So we're providing that functionality now in this latest cloud release. GRDC, sort of the BTP add-on to the group reporting solution is evolving very quickly, and we've introduced some formula and comment functionality recently, and then we've further expanded accounting journal functionality, group reporting journal functionality, and extended that to multiple consolidation groups. So these are the 4 main blocks that I want to cover in today's session with you. Let's start with the extensibility of the financial statement attributes. It doesn't sound very exciting, but actually it's key functionality that really, as I said, extends the reach of the solution. I think you're probably aware of the importance of these attributes in driving the consolidation process, right? So what we're essentially doing is grouping together common financial statement items under common attributes, right? And that means that the customers can then tailor the consolidation process or tailor the process steps of data collection, of currency translation, intercompany elimination, and also analysis, cash flow reporting around these groupings, right? So what the functionality that we had before really was dedicated to the standard processes that we have in group reporting. What we've done now is to introduce these selection attributes also as custom attributes. So customers can sort of define attributes for custom specific processes they want to include in their consolidation process. So you can see on the screenshot on the right hand side how you could potentially use these custom specific attributes, right? So you could, for example, use custom specific attributes to facilitate validations and eliminations at various stages in the life of a financial statement item, right? You could sort of specify a selection attribute life cycle phase, right? Or you could have, say, a target attribute for a new swinging position reclassification, right? So if a certain financial statement item sort of changed sides in the balance sheet, right, you could then use this attribute to push that data over with a reclassification to the correct side in reporting. Or you could use it as a further attribute for uploading and analyzing financial statement hierarchies based on additional dimensionality, right? So there's a lot of flexibility in how you could use this particular functionality. So what I want to do is just maybe go through some of the initial steps that you need to take to actually get this FS item extensibility up and running. So the first step you obviously need is to create these FS item attributes as custom fields, right? So you need to sort of call up the custom fields app, and then you can define whether the particular attributes that you're intend to create are then time and version dependent or independent, right? For time and version dependent, I mean, they're essentially like the standard selection attributes or the target attributes that you've already maybe seen in your consolidation process. So once you've done that, then you need to actually define how these attributes are consumed in the define financial statement items app, right? So once those custom attributes have been created, you can bring them into the define financial statement items screen. You can set up filters for the custom attributes in the filter bar. And what you can also do is to, with the adapt UI option, you can include those attributes also in the FS item details screen, right? So that's really the second stage of the process, to bring those attributes into the financial statement item master data itself, right? The third selection is how you actually drive the selection of those particular financial statement items, right? And as you're aware, when to drive, say, a reclassification process, we first of all have to set up the relevant selection ID, right? So what I want to sort of focus on here is the custom defined FS item target attribute, which we can use in a reclassification rule to check that the financial statement items and reclassify negative balances on those financial statement items to a specific FS target item, right? So swinging position, those items would then be shown correctly in the balance sheet following a reclassification, right? So first of all, in the defined selections app, we then need to have a selection ID which acts as a trigger for the reclassification rule, right? So you then need to, when you define your selection ID, you then need to select in this when you open the fields list, you can then select the custom attribute sign reversal target FS item, right? So that's essentially the third step of this overall process in the define selections app. The final step is really in the reclassification rules, right? So you need to create a new reclassification method containing a new reclassification rule, which ultimately checks all the relevant FS items and then reclassifies the negative balances to the relevant FS item target value, right? So what we need to do is to select the sign triggered reclassification flag in the settings. We need to select that as a minus because we want to reclassify negative balances. And then in this trigger tab, we then need to select the relevant selection ID that we've created, which would then select all the relevant financial statement items that have an FS item target attribute for the sign reversal target. In the source definition of in the source destination of the reclassification rule, we then specify the sign reversal target attribute. And in the debit credit tab, we also need to make sure that the system only selects the FS items with a negative balance. So there's a number of steps you need to go through in the reclassification rules. Under SAP.com, you can look at all the RKT material on this, and there's a long list of different slides that you can go through to see how different examples can be set up for this particular process. But this is key functionality going forward that really extends the scope of the solution. So we go to inter-unit elimination of profit and inventory. This is sort of key functionality for our manufacturing customers, right? So in a corporate group, when one subsidiary sells goods to another subsidiary, and when the buying unit still has the inventory on its books at period end, then the profit, obviously, or the margin needs to be eliminated, right? So the elimination takes place at the group level, and then what we're doing is eliminating the inventory against the margin, against the margin, right? So the P&L account for profit or cost of sales. So we're matching the inventory value of the buying unit against the margin rate reported by the selling unit. So there's three different steps. There's the matching that takes place, the calculation of that amount to be posted, and the actual posting. That's all done within the reclassification functionality of group reporting. So the selling unit reports a margin rate as a quantity, and this can be by product group, by brand. You define the dimension that you're going to be using, right? And the buying unit then reports the goods that have been purchased and how much of that is still in the inventory, right? So what we do to do the elimination, we read the percentage of the profit, and then in the reclassification method, we have a new flag percentage from partner. And then we can do the elimination on a consolidation unit level, on a profit center level, on a business segment level, right? To do that, you need, maybe you've seen in matrix reporting, there's a flag that you need to set to activate that. That's the same functionality that we're using here to enable the elimination on that managerial entity level. So we need to also set up a percentage flag to determine which particular dimensionality, which particular dimension is then being used for the selection, and then it's being used then for the posting of that margin being eliminated. So when we run the process within group reporting in the consolidation monitor, you can see the results here of the IPI reclassification. So in the first screenshot, you can see the obviously the consolidation monitor, the consolidation task. The second screenshot below that shows the reported data from the selling unit S01 and the buying unit S06 for the material merchandise A, right? So the selling unit has a 10% margin rate, buying unit has an inventory value of 500,000. And the third screen, you see the overall postings, right, that we're processing as part of the reclassification step. So the 10% margin of the inventory value, the 500,000, is eliminated then for this material merchandise A. So quite easy to set up, but a key functionality. We provide content for this. So within the cloud content, you've got all the content that you need to get going. If you've activated 1SG previously to 2108, you need to take a look at the how-to guide, because you need to set up the configurations. There's a note. Well, the how-to guide is also included in the FAQ. Yeah, so you can just download that how-to guide to get up and running. We've also in this release also introduced a new feature for reclassifications, and that enables you to include custom fields in the reclassification rules, and we're providing a body to enable you to do that. So using the extensibility framework, the body can use the custom specific fields to do relevant postings. So moving on to formulas and comments within group reporting data collection. We can now define formulas, right, in the Define Forms app. So in the Form Designer screenshot, you can see here on the left-hand side of the screenshot, you can see all the settings related to the formula definitions and the contextual values. So when you run in the runtime, when you run the formulas, you can not only check on the data, but you can also calculate new cells, or new cell values. And if you require, you can then also save them to group reporting. Kick this off. Here's a quick video. Here you can see sort of an input form of the GRDC Enter Group Reporting Data app, which we've created with the form designer. So in the rows, we have the individual financial statement items, subtotals being calculated in real time. In the columns, we have the uploaded P&L balances and the breakdown of those balances by functional area. So the user is entering the functional area to enhance the data that's already been saved in group reporting. And there's a visual control column that is created using the formulas, which is automatically validating whether the data entered is correct or not. You can click on the cell details to then see the formula involved and also all the dimensionality that is relevant for that particular cell, right? So that's one aspect of the formula functionality that you can then use to really validate the data that you've got coming through group reporting. What we also shipped with the latest cloud release is comment functionality within group reporting data collection. So this is really just the first step, right, in ultimately providing a comprehensive service for comments, questions, and answers within S/4HANA group reporting. So this service the CQA service is going to be sort of further enhanced going forward. This is just the first step. So it's a service that's provided on the BT platform. We're now leveraging that within group reporting, but you'll see, sorry, within group reporting data collection, but you'll see later on in further releases how this service is also going to be used within group reporting, and we intend to provide this functionality also within the financial statement booklet app, which you might have heard about. So what this comment feature enables you to do is to add comments to cells in the Enter Group Reporting Data app. And once you've added a comment, you've got a triangle in the cell indicating when and where the comment has been made. If you call up a different form related to the same dimensionality, then you'll also see that comment, right? Because this comment is being persisted within BTP. So the saved comments also show the creator and the time and the date of creation. For more information on this functionality, I'd suggest you look at this 3047695 note. So that keeps you up to date with all the latest functionality in comments around group reporting data collection. So we're running sort of fast out of time. I want to just jump to the next section, which is manual journals with multiple consolidation groups. So we had extensive functionality around sort of manual journals, around journals with different versions, with extension versions, and how that was also enabled. Also the upload functionality for creating manual journals, and we have full coverage for that. What we've done with this release is to enable a journal to be created, which could then be relevant across multiple consolidation groups. So this is something that a lot of our customers were asking for, especially the large multinationals with multiple subgroups. What we've done is enable this functionality using a primary group and using additional groups, right? So the primary group is ultimately the parent consolidation group. The child consolidation groups are then entered into the additional groups. The data you enter then has to be valid for across all of these groups, right? You can't sort of specify different data to be pushed into the different groups, but what we've got here is then functionality to enable you at one time to post data across all of these groups, right? What the system does is it creates different accounting journals, different group journal documents for all the different groups, but it bundles those together under one document bundle number, okay? You can also use, I mean, this is a screenshot from the manual group journal entry functionality, but you can also use the import group journal entries app to upload the data via an Excel front end. In 2105, we also shipped a compare journal entries app. And what you can do is you can use that app to compare the journal entries across all the different consolidation groups that you've been creating documents for. Just to check that all the relevant consolidation groups have been posted correctly. This is relevant, you can see from the posting type in this screenshot here, this is relevant for posting level 30 documents, right? So only relevant for consolidation group specific postings, but it's I think a key functionality that is enabling our customers to sort of automate this process in a better way than before. Previously, you had to use a copy function to get the data from one group to another group. Now you can post all of that data all at one time. Yeah, so I think with that, I think we've come to the end of our session. So thank you very much for listening. As I said, a lot of this EKT material is already out there, so take a look at that. That's very extensive material on the latest developments that we've shipped in group reporting. if I just jump to the... Okay, good question. So just picking up one of the questions here in the chat, there was a reference to the financial statement booklet app. So this is already shipped in a sort of an initial what do you call it? In a test mode, in an initial pre-shipment mode. So a number of customers are already testing this out in cloud. This is a reporting functionality that the group reporting team has been sort of developing. So previously we've been using S4HANA generic reporting functionality to analyze the group reporting data. Now with this financial statement booklet app, you can use a dedicated group reporting tool to actually analyze the group reporting data. So it's a very flexible tool. It's in a way, it's a sort of a report writer tool that can be leveraged by our customers. The customers have seen it, quite excited about it. As I said, this is at the moment only in pilot mode. We're planning a GA shipment next year in 2022 for both cloud and for on-prem. So yeah, stay tuned. But I think this is going to be very useful functionality for our customers to do their consolidation reporting.
Okay.
So, Catherine, I think
it looks like we are absolutely perfect from a timing perspective. Thank you for your excellent presentation, Philip. There was there's one more question in the Q&A tool. Maybe we can take a short look at that. But this seems to be more like an answer or like a question, right?
Yeah. I think it's the source needs to be an SAP system. So ultimately, from a group reporting perspective, all the documents that are being posted, all the consolidation relevant postings are all being posted into the ActDoc-U table. So the financial statement app is really just looking at the data in the ActDoc-U table. Yeah.
Perfect. Okay. Thank you very much, Philip. So yeah, then we're absolutely on time. So I would hand over to the next speakers, which is Volkmar and Chenshu, and they will talk about the update regarding revenue and cost accounting.
Yeah, hello, good morning, good afternoon. My name is Volkmar Zahn. I'm here together with my colleague Chenshu Zhong to give you an update about revenue and cost accounting. And equally to Philip, we have quite a packed agenda we want to go through. Just a quick look at what we have covered, hopefully in the next 30 minutes. So first of all, we would like to start with a general overview about revenue recognition in S4HANA Cloud. It's quite important because there's often questions around which flavor should be used. Do we need revenue recognition? How does it all fit in? So we would like to get started with such an overview. Secondly, we ship major innovations around the support of subscriptions. And this is quite an important theme. You probably heard about the digital economy, the subscription economy, the solution business. And this is where we want to provide an overview, also share a little bit the latest news and what's in the pipeline, as well as also present a little demo. And then Chenshu will take over to share with you the latest innovations around project-based services. Again, here, news, overview, as well as a quick look into the system. Now, let's get started around the general overview around automated revenue management. And we think this is quite important to start with because we see many, many different flavors around revenue recognition, which very commonly depends on what scenarios you have. You have very often more the typical product sales, but services are becoming more and more relevant as a subscription business I mentioned before. And of course, all of that ties together into then solution order management, where really we bring in the different order types, not to forget projects, of course. And all of that, of course, is governed by accounting standards. So here in our context, this is IFRS 15 or corresponding standards in the US. And we would like to share with you how we cover this with our solution portfolio. And here, I just want to highlight a little bit at the bottom what our automated revenue management portfolio provides. So here we certainly have in S4HANA Cloud the event-based revenue recognition, which ties into projects, as well as contract-based revenue recognition, which in the on-premise world you also know under revenue accounting. And in today's session, we really want to focus on what we provide as new innovations in event-based revenue recognition. Just very briefly, so EBRR, as it is short, supports you covering revenue and cost recognition scenarios, and ties very much also into margin analysis and profitability. And comes, of course, with a very tight integration to not only the operational scenarios, but also into the universal journal with a lot of benefits. So there's always a full transparency, not only into the revenue figures, but also how that ties together with cost to really provide this single view on margin. It's, of course, covering the matching principle between revenues and costs, and comes with limited or less reconciliation efforts and a real-time reporting. And there's a lot to share about this, and we will not go through all of that, so no worries. We will certainly focus on some of those areas, which is here in our session, the project-based services, which Shen-Shu will share with you. But we just want to bring this here on the slide that you can also find a lot of details around the best practice content around sell from stock, around service management, service orders, and service contracts, as well as what we refer to as project-based sales. And another topic which is today's focus is, of course, the subscription area. Now, this is also where we want to get started. Why is that important? I already mentioned the reference to the digital economy, the subscription economy. So we see a lot of industries. There's not only the topic around compliance, which of course is natural to revenue recognition, but also a big topic around transformation. And a lot of industries and a lot of companies change their business models. They often extend their product portfolio, their product sales into service models, adding an additional service and implementation project, for instance, as well as also tying this together into an integrated solution business. And this is what we would like to talk about. I have some statistics. It's always nice to have a few quotes that support really our focus from a development perspective. And here in this case, I just found some really interesting ones. Of course, they're a little bit dated. It's from 2019, but I think they're still very much relevant to us. And here, what we see in the market certainly is a focus on subscription models, on recurring revenue models. But at the same point in time, I found this quite interesting, the reference to that many organizations, many companies struggle to implement that. And you will find that, of course, these revenue models and how you do the accounting for these services is, of course, a little bit different to maybe what we know traditionally. And here, my first topic will be really in how event-based revenue recognition has been enabled for subscription billing. This is already available to you. It is part of the CE 2108 release of S4HANA Cloud, and you can use it. And of course, this is also a good foundation now for further extensions. Now, what we do with subscription billing, you have to know that subscription billing here at the bottom is its own SAP app, or BTP. Nowadays we call it BTP app. So a native cloud development which allows you to deal with usage-based and recurring revenue models. And for that, you usually set up a subscription. You have a pre-billing. The subscription itself has different rate elements tied to a rate plan, for instance, around one-time fees, activation fees, a recurring revenue pattern, as well as the usage and consumption model. And based on that information, in subscription billing here in the BTP app, we can also provide and produce a so-called billing forecast. That is quite important. So for instance, if you imagine you have a 3-year contract, then the system with this billing forecast allows you to identify, okay, what are the recurring revenues to come in over the course of the next 3 years. Now, while this is a BTP app, of course, we also want to utilize that information. And for that, here in subscription billing, we build an integration. Of course, this was a joint team setup with the teams around the quote to cash area. An integration into provider contract. So the provider contract in the end represents the subscription S/4HANA Cloud, and also the integration into the solution order. The solution order, we will see this in a minute, a demo, is the starting point for such a subscription. That's one way. You can also utilize the APIs within subscription billing to create your subscriptions, as well as the corresponding items behind that. So subscription ties into the provider contract. It can be grouped into a solution order. And now with the news in the 2108 release, we also enabled this for revenue recognition. And if you're familiar with EBR, you know all the rules are basically set up through so-called revenue recognition key. They define what data should be used as a source and how revenue should be recognized. Now, to perform revenue recognition, of course, we need a little bit more than that. We, for instance, have here the billing forecast, which is then represented as a billing plan with its corresponding items. And on that basis, then revenue recognition can be performed and split out the revenue and recognize this ratably over time. Now, this is the general setup. Again, here a few references. If you require more information, I would like to point you to the SAP Roadmap Explorer. I assume you will get access to all these slides and then as a result also get access to all the links. Here for 2108, as I mentioned before, we shipped the first iteration of EBRR with subscriptions. And of course, this is now the foundation for further extensions. For instance, in the upcoming release, we plan to also ship new rules, additional rules, for instance, based on a 360 days calendar year. So where you recognize revenue based on an equal footing. As promised, I would like to have a very, very short demo only. And this demo guides us through a subscription bundle. So we imagine we have, let's say, high-tech company. The high-tech company sells, of course, software subscription. And very often you may also have a little implementation project, a starter service maybe. And as pointed out before, one usual starting point could be the solution order that ties all that together and allows you to combine the different order types into one unified offering to your customers. Of course, we will look into the subscription. There we'll navigate from the solution order into the subscription, look at the different elements there. And of course, we also then would like to look into a margin analysis and revenue recognition. Again, just a very short look into the solution portfolio. For this, I will now bring over my screen and go into full screen mode. So we start with the solution order. And here in this case, I have already prepared my solution order. And I'm not sure how to get rid of this because it should not be over the go button. And we see in this subscription bundle for our customer, we have a certain net value and order value. There's also the integration to situation handling, but this should not be our focus. And from there, I can drill into the items. As pointed out in the demo script, we have our cloud subscription of a value 8,000 euro, which should be recognized over the period of the subscription, and the starter package, startup package here in this case would be $4,000. And we see this here also in the nice solution order progress view. From the solution order, we see that the customer project is already in execution. This is another topic we could share with you in another session. And the subscription billing integration here, where I can now navigate into my subscription. Now, you see me moving over into subscription billing itself. into our SB0B2832. That's the number which is shared equally across subscription billing as well as S4. And of course, we will not go into all the details around the subscription, but usually you can expect the common features you may require for subscriptions, a cancellation, for instance, the duration, a minimum term of 12 months, the automatic renewals, an expected term, so how long the contract likely will run, and so on. All of the features usually you may require. And when I move into the item itself, we see that this subscription has been set up for 10 seats, 10 user licenses, you could call it, as well as what the rate model looks like. So here in our case, we have a recurring charge, for instance, of 6,000 for the 10 users, which is based on $600 per year for each user element. Now, we can also have a quick look into the pre-bills. So within subscription billing, we kick off the pre-bills, and I do this now for my specific subscription. And the system has been collecting all the items, maybe usage or maybe recurring. Here in this case, the system billed $8,005, which is split out. So for instance, here in this case, it was set up in a way that this is always towards the end of the year. So for September the 1st until the end of September, you would have a revenue of 2,000, which is billed, and then for the next year, 6,000. All of that, of course, very much dependent on the setup in the system. Now, let's look back into our, I need to move over back to my solution order, because from here, I would like to now go back into revenue recognition. This is all what we wanted to focus on. And for that, if you're familiar with EBRR, you know revenue recognition usually comes with periodic jobs, and it comes with so-called monitor apps. And this is what we want to look at. So here again, for our subscription/provider contract, as I mentioned before, the subscription is modeled into a provider contract, and we want to execute this. And I see here in our model, we have a 365 days recognition rule. Recognition keys define the rules, define how revenue should be recognized. So here in our case, this is set up as a day-based revenue recognition. And of course, we would like to understand this a little bit better. So for that purpose, I will now move into the monitor app. At the moment, no billing has happened. As a result, you will not find any billed revenue. Usually, the benefit of using EBR is that the system automatically in real time defers the revenue. So if we had already a bill, an invoice posted into the Universal Journal, you would find here the billed revenue as well as the deferrals, which are then automatically posted into contract liabilities. Here in our case, this bill has not been executed to the end into the Universal Journal. And what we would like to test is now, how does the revenue work? So for that, I will not post the revenue, but I will only perform a simulation. And we see here for the first month, which would be the time frame of September, the system would day-based, that's part of the rule, post the $493, and then of course recognize revenue over time, as well as defer revenue if in the meantime the invoice is already posted. So that was a little quick overview, and with that, I would like to stop my sharing and hand over to Shu, right?
Yeah, thank you, Volkmar. Now I will share my screen. Now we have seen revenue recognition in subscription scenarios from Volkmar. In the following presentation, we want to look at the update on revenue recognition for the project-based services scenario. With event-based revenue recognition, we cover revenue recognition requirements of professional service industry. For a customer project, invoices can be created on a fixed price basis, a time material basis, or as periodic services, or on a usage basis. In standard, there are 4 contract types provided to determine the billing method as well as the revenue recognition method. For fixed price projects, billing is based on the amount and date provided in the billing plan. Event-based revenue recognition calculates the cost-based percentage of completion based on plan actual data. And for time expenses projects, billing is based on time expense confirmations. Event-based revenue recognition then simulates time expense billing for every confirmation to determine the realized revenue. For periodic service contracts, billing is then based on the amount and date provided in the billing plan. A valid period is required for every billing plan item for the periodic based services. The realized revenue will be calculated by revenue recognition based on the amount and period. This will be done with a periodic run. Then last but not least, for usage-based projects, this allows you to bill customers for services with a certain usage volume, such as number of service tickets processed in a period, or the number of licenses used in a period. Revenue is then realized directly for the posted usage item quantities. The standard custom project scenario covers the key steps of the end-to-end process for project-based services. In this slide, you see a high-level process flow of customer projects. The top line shows that the operational process in the professional service, and the bottom line is the process in event-based revenue recognition. The end-to-end process then starts with the creation of a customer project. As a project manager, you create a customer project and maintain project details such as work packages, resources, and billing plan. In the second step, as the employee, you then record hours via the timesheet. Upon time confirmation, revenue is calculated according to the assigned revenue recognition method and recognized immediately. Next, as a project billing specialist, you prepare a billing document request for the billable items. Once the request is submitted, billing clerk can create a billing document for the project. With billing, revenue recognition is triggered and posts revenue deferrals. At the end of the process, the project is set completed. With the last periodic run, the full amount of revenue is recognized for the project, and the project manager can review the profitability and all other project KPIs. All these steps are fully integrated with event-based revenue recognition and profitability analysis. For the cloud release, from the cloud release CE 2005, we offer a one-stop solution, one-stop shop solution for called project billing to all project invoicing scenarios. Event-based revenue recognition, of course, goes hand in hand with the project billing and constantly enhance the functionalities to support all invoicing scenarios with activated project billing solution. With release 2108, the automated revenue recognition for projects with contract type periodic service in project billing is supported. You can select project billing as the billing solution for a periodic service project, and the revenue is automatically calculated and recognized with a periodic run on the basis of billing plan defined for this customer project. For projects with contract type fixed price and time expenses with activated project billing, you can define down payments in the project billing plan. Down payments received are treated as liabilities for projects and are considered in the revenue recognition processing. In the WIP Details Report 2 app, you can analyze the down payment received, requested, the down payment received. In addition, the reduction of the WIP due to down payment liabilities will also be displayed in a separate column in the WIP Details Report 2 with Cloud Release 2111. For time expenses projects with activated project billing, you can also define amount cap for the project. With cloud release CE 2108, the amount cap is considered in the event-based revenue recognition period and closing, and the recognized revenue cannot exceed the amount cap. The revenue cap is displayed in the WIP details report tool as well as the revenue recognition monitoring app. With the cloud release 2111, event-based revenue recognition also supports the projects with contract type usage-based, with activated project billing solution. You can perform usage-based billing for your service materials defined in a project. The activity allocations for services will be considered for billing and revenue recognition. Also, you will be able to add additional items for invoicing with project billing. The additional amounts are considered for billing and revenue deferrals. However, it does not impact the REAP for the projects. Okay, this is a brief overview for all enhancements in event-based revenue recognition for customer projects, and you can find more details about them in SAP Roadmap Explorer by clicking the links in the slides. In the following demonstration, we want to look at the capabilities of event-based revenue recognition for usage-based projects with activated project billing. In this demo, the company is providing intelligent solution for their clients. Recently, the company entered into a 3-month contract with the client. The contract has one work package for their cloud support services, and the client will be charged based on the quantities of cloud support tickets. The T account field explains the posting along the demo floor. In this scenario, the project has a service material for cloud sales with a price rate 55 USD per piece. A junior consultant is assigned to work on the project, and there are some additional resources and expenses planned. In step 1, the consultant posts 2 hours for time confirmation. The actual costs, $90 are posted with the document 1. And in step 2, 5 pieces of additional resources are consumed, and the actual costs, $50 are posted with the document 2. You may notice that in the usage-based scenario, time confirmation and allocation of additional resources are not billable. Hence, only costs are recognized, but no revenue is recognized in step 1 and step 2. In step 3, 5 pieces of cloud support tickets are posted with the document 3. It means that to process 5 tickets, the consultant spent 2 hours and consumed 5 pieces of additional resources. The allocation of the cloud service is relevant for billing and revenue recognition. With the document 3A, we recognize $275 revenue, which is calculated based on the invoice simulation for the service material. In the step 4, the usage-based billing is issued. With the document 4A, we defer the billed revenue because revenue realization already took place with the step 3. And in step 5, we execute the periodic run. With the document 5, the accrued revenue and the deferred revenue are balanced with $275. All right. With that, we can go to the demo. 1 second. Okay. So as mentioned, we start with a customer project, which is already in execution. And in this scenario, a maintenance support project for the intelligent solution was sold to our customer, and the project is scheduled for 3 months, as you can see here. And the project uses a new project billing solution. Here, in the work package, a usage-based work package has been created for the project. In the overview for this cloud support work package, we have 20 pieces planned, and the estimated effort for the 20 pieces is 10 hours, and the planned cost are $600 and the planned revenue are $1,100. Now we can go to the detail screen to view more information for the work package. As mentioned here, for this work package, we have the service material, which is 20 pieces, and we have planned a junior consultant to work on this work package, and the planned effort for the junior consultant is 10 hours. And we also plan some additional resources to complete the tasks. In addition, there are some planned expenses. So for the junior consultant and also the additional, then just to mention that for this work package, we have also planned a junior consultant, and we have some additional resources and expenses planned for this work package. And the junior consultant and also these additional sources and expenses are defined as not billable according to the billing control category. Now we will move back to the overview page for the project to view the staffing and also the billing. Now in the tab team, you would be able to see a junior consultant has been staffed to work on this work package. And in the billing tab, a usage-based billing item is created for this project, and the amount to be billed for the project is $1,100. For in this demo, I have already performed the step 1 and step 2 to record some time confirmations and also the consumptions of additional resources for the project. Now, in this project profitability overview, we are able to see the current profitability status for the customer project. So after step 2 for the project, we have the actual cost as $140. Hence, the recognized margin is minus $140 because there is no revenue recognized for time confirmation and activity allocation for the additional resources. Also, you can see the WIP is 0, meaning there is no work in progress recognized for this customer project. Now we are in the app direct allocation, activity allocation to enter the, hopefully you can still hear me, okay. To enter the, to post the activity allocation for our cloud support tickets. So the consultant performed 2 hours, and in order to process the 5 tickets of the cloud support tickets, and this was with posting, it triggers immediately the cost of posting in Universal Journal, and in real time recognize revenue recognition for this activity allocation. Now we can go click the journal entry to view the T account fields. Event-based revenue recognition is fully integrated into a universal journal. Hence, there is no, hence the cost data and the revenue recognition data are stored in the same place, and there is no reconciliation effort required for revenue recognition. Also, event-based revenue recognition supports payroll accounting. As you can see, for this activity allocation, we post directly the journal entry in all ledgers which are active in the system. Last but not least, we can go back to the project profitability overview to review the current status for the project. Now I click go here. Then after activity allocation for the cloud service tickets, the recognized revenue is now $275 US, which increases our margin to $135 US. And for the balance sheet position of the project, we have the WIP as $275 US. Of course, there is a possibility to navigate to more details about the postings which have been explained in the T account fields. With that, I'm at the end of the demo. So hopefully you enjoyed the demo. And now I will go back to the presentation. Now there are also a lot to say about other enhancements, but due to the time limitation, we want to rather provide you some more useful information. So in this slide, you're able to see some useful links where you can access more information about event-based revenue recognition. For example, you can go to our product systems documentation to find the latest updates for revenue recognition in Cloud Release 2108. And you can view all our best practice content in SAP Best Practices Explorer for the scope to find all scope items. Of course, we constantly provide updates for revenue recognition via the stay current programs, and in this landing page link, you are able to find the links to the right stay current courses. To facilitate the implementation of the revenue recognition, we also provide some cookbooks and also the note to help you understand the details of the product design, and you are able to find some nice and useful demos in the SAP demo store. Last but not least, our experts provide really some great blogs to talk about event-based revenue recognition functionalities for different supported business scenarios, and also the configuration of event-based revenue recognition. So if you are interested, you can find the links later when the presentation is shared. Now, not sure if we still have some time, but if you have some immediate questions, please feel free to raise your questions.
Yeah, thanks, Xinshu and Volkmar. As we're a bit behind schedule, I would suggest that we take the other questions in written format in the Q&A tool. I've seen that there is one left. So it would be great if you could provide that answer in written format, and I would hand over to Holger already for his part, and yeah, so that we can start straight away with this.
So I will hurry up a bit, and you can steer me if it is not fitting to your expectations.
Okay, good. Perfect. Thank you.
I will immediately start. So my topic is SAC group reporting planning. So SAC means, of course, SAP Analytics Cloud. So I will try to give you an overview, a crisp overview about what we have implemented. So first of all, of course, I will let you know what was the scope of what we have implemented, what is the planning strategy very quickly, then what do we offer, what supporting functionality is available, how is the whole thing to be seen by architecture and how can we adapt it, what is the integration, especially with the integrated financial planning, and what further sources you can get to basically dig deeper into the topic. Good. So the business process requirements, perhaps this is for you a bit surprising. So you don't see too much about the group reporting itself or about consolidations. Basically, it's that what we wanted to add, and I will show this a bit more detail later on the slides, a more or less simple planning functionality from group reporting point of view. So as said, the integration with the other planning functionality I will mention in a few minutes, but overall you will find a profit and loss planning, a balance sheet planning, and the respective reporting and analytics. And basically, you will not see any elimination functionality or consolidation functions in this content. So it's pure data entry and planning using a tool which enables you to do this in a nice and slim way. Of course, we have added administration functionality, since this all needs to be prepared, as you see on the right side, to the planning process. You always need to have preparational steps, load the respective master data, the respective reference data, make sure that the parameters and the configuration fits, and that proposal values are available for the planner. So this is all to be seen under administration. And of course, then we have the planning functionality and the consistency functions and derivations and so on. So we'll explain this in a few minutes. First of all, why did we choose SAC? So SAC is the go-to planning tool if it comes to planning at SAP, especially if it comes to S4HANA. So you will see that on top of S4HANA, you will have this, of course, the group reporting itself, but you will also have the SAC as the planning tool. And also from reporting perspective, at least parts of what we will show will also be using SAC as reporting functionality. So from a content point of view, how is this all structured? So we do have the tool, which is the SAC SAP Analytics Cloud, on top of the, or within the tool even. So there is a special integration functionality called the SAC connector for S4. So basically the two development groups have worked tightly together to have as efficient as possible integration with the wizard. And we also do deliver the integration functionality, at least for the import into SAC, together with the content. So you can see that is the next piece of what we deliver, the group reporting planning content, which, as I said, is quite simple and contains the P&L and the balance sheet planning, the reporting, and the necessary planning functions. And last but not least, we do have the point of flexibility. Why is that so important? I think in group reporting planning, it's not as important as in integrated financial planning, which is highly complex. And here we do have, let's say, a more simplified approach, but still, of course, we always have an eye on how do you, what kind of adjustment capabilities do you offer to the customer and to consultants to adjust the content to the needs of the respective use case. And I think this is something where SAC has lots of strength. But still, of course, you need to be to keep in mind when you design your content that it's not too complex and that it can easily be brought to life. Good. So while before we just saw basically the principal business processes, you see here, okay, what do we have in our offer? So we have profit and loss, balance sheet, and reporting. In the scope, we have analytics. So this is something that we need to still add. You will see that in the Outlook. And of course, the administration we do have. And I'm not sure if you have seen it in the scope. We have seen a bidirectional arrow. At the moment, it's a one-directional one. So currently, we can transfer the master data from the S4 system for the group reporting specific master data. And we do have the transfer of the reference values for actor Q that we can transfer. Of course, technically, we can have more resources as well. but the write back into ActorQ is not yet available. So we're currently working on that. Okay, so what is basically the scope and the goal of the group reporting planning? So the group reporting planning, as said, offers the profit and loss and balance sheet planning on the respective group reporting dimensions. So of course, I will show this in a second. These are different ones than compared to the integrated financial planning piece. And from a planning perspective, how do the two contents play together? Because also in integrated financial planning, we do have a P&L and a balance sheet entry. So the idea is that for companies that belong to the group and are managed by S4HANA or S4HANA Cloud, basically you can do the planning in the integrated financial planning piece where you do have company codes and all of this available. And these values can be afterwards transferred back to the planning table actor P and be consolidated into the group reporting table actor Q. For companies not being part of or not being managed by S4, but being part of the group, basically you can do the planning in the new content. And as said, not yet available is the transfer into actor Q table, but as soon as this is available, of course, then the values come together in the actor Q table. So from a content perspective and from the data model perspective, you see here that we, other than in the integrated financial planning where we use accounts and trading partner and company code, we have here the financial statement item, we have the consolidation unit, partner consolidation unit function area. And basically we offer in both cases for the P&L and for the balance sheet, in both areas we have the pure account or financial statement structure-driven entry, and a second one where we have the partner consolidation unit available, where you can have a differentiated planning here and basically distribute your values accordingly. From what the tool is offering, so I think for most of you listening here, is SAC is a new tool. And I mentioned already that we do not only take care for just the planning layout and the function, but also for the process around. So you see the prepare area, you see the schedule, the prognosis and proposal values, plan and simulate, visualize and finalize. We follow the same approach also in the other content that we create. And here in this group reporting planning, this is quite new. So we do not have the same coverage here, but we do already have, of course, the respective model defined with the respective dimensions as mentioned before. And of course, also with the possibility to set certain parameters and drivers for counter postings, for derivations, and for the display and aggregation, of course, of certain values. We do already deliver, and you see it always here, part of GRP content. We already do deliver the respective queries that enable you to import the data from S4 into SAC for the master data and for transaction data. And normally you are just able to just click on refresh, and then the data will be taken again from S4 to SAC. You can also schedule this, and this is all part of the delivery. We furthermore, of course, have kind of a proposal value calculation. In this case, we just have a very simple one, to be quite honest. So we get the values from actor Q, and we have a function that copies basically it into the plan year, and then you are able to adjust the values. From the planning layout perspective, we will have a look later during the demo, but as you can see here, we have a second one. And in the last picture, you saw the one just with the hierarchy of the financial statement items. And here you have a financial statement item list view with a partner consolidation unit as a drill down capabilities, and then the layout itself. From a functional perspective, we do have mainly one function, which is the carry forward of the balance sheet. So you have both types of two types of entry capabilities. One is that you have the changing values that you can enter, and one is the closing balance that you can enter. And depending on what you have entered, the other value will be calculated as soon as you click on this function. The differentiation is via the account, via an attribute in the account. We also have delivered some reports these are just list reports, as I mentioned before. So what we are still missing and what we are working on is the analytics, so the graphical visualizations like charts that we already have in the other plannings that we deliver. We just, from a timing perspective, just need to do it here still. So here you will just see list reports for the moment. From an architecture point of view, basically, it's important to understand that these levels, just to be very shortly mentioned. So you have the user interface, which is a web-based user interface, and it is called Story. Here you have the arrangement of layouts and functions and filters. Then below that, you do have these planning grids and charts. You do have the so-called data actions. You could also call them planning functions. Below that, you have a model. In BW, you would have called it cube. And then you do have this connecting to S4 via OData services that are based on CDS views and that are normally able to read master and transaction data. And as said, in the future, there will be also a write-back capability to Actor Q, as it is already available for Actor P. What is very important is that you have the chance to influence what is delivered by doing changes here. You will later get another slide where you see a detailed description of what you can do and where you have the detailed information to do that. And but just that you already know that. So what is important, of course, what you see here is the content of the integrated financial planning content of SAC. This integrated financial planning content is far more complex. You do have the cost center, cost activity, project planning content. You do have product cost simulation, sales and profitability planning, CapEx planning, and financial statement planning, which includes a P&L, a balance sheet, and a derived cash flow. And of course, these values, these structures are very much related to the group reporting planning, and the look and feel and the handling is more or less the same. In the end, I will have a slide for the integration in a second. It is important that for the integrated financial planning, we always try to connect to related processes like IBP, like workforce, and also we see here the group reporting planning, where we also think about how do these two fit together. And this is something that you can see on this slide. Just by the way, because I forgot to say it, you will always see here these short links that guides you to the latest status of the help, so that you have the chance to dig deeper into what you see on the respective slide. So coming back to the slide itself. So of course, in the S4 system, we have the universal journal, the Actor A and the Actor P, and the Actor U table, which is the consolidation piece, and the process to do the consolidation. For the integrated financial planning, we can basically take the values, the reference values from the universal journal. We can do our planning, and afterwards we can write back to Actor P table. For the universal, for the consolidation, for the group reporting planning, it's similar. So we do have basically the chance to take values from the Actor Q and from master and transaction data that are related to that. And we can basically do our planning in the group reporting space. What we do not yet have is the transfer back into Actor Q, but you can see as soon as this is available, you will have this values here being brought together in the Actor Q table. And until then, at least you have the chance to bring the values together within SAC. That is possible even today. So that is the piece how you can basically see these two contents together. What I just want to point out is, and I will show you in a second a few samples, that we spent quite a lot of time, and I will not go into details due to time restrictions. We spent quite some time into documentation. So we do this also for the other contents and create also videos and very detailed flowcharts. So we are in the process of doing that also for the group reporting planning. But what I want to mention is that here, for example, I've added in this slide that you have seen already before, a lot of things that are useful when it comes to a real project. Why? Because you see here how to adapt stories in our case, how to shift, for example, the time horizon, how to adapt data actions in our implementation, how to add new dimensions. Yeah, so all of these things we have documented also that you find about the OData services, the details, so that in the end, this is at least something that would help you to, let's say, go a bit more into details. And this documentation, you will basically here's the cloud part, you will find as part of the documentation for the financial planning, where you see, for example, also in the architecture overview, you will find some topics about group reporting planning. In the overall flow chart, you will find the relation to group reporting planning. In the getting started, how to import the content, how to connect, you will find always, let's say, also what is related to group reporting, for example, here. So as you can see here, you are guided through how you can set up the system. And in the end, like for other planning processes, you will also find the planning and the content and the documentation for group reporting here. So just that you see that, that you know what is available from documentation point of view. Good. From an upcoming topics, it's for the moment, it's already clear. That's what we are currently working on. I mentioned already the right back to ActoView. And the other piece that we are complementing now is in the area of reporting and analytics, the visualization, the graphs, and the more graphical kind of reporting that we want to add here. Good. So that's basically the theory from a system perspective. This is how SAC is looking like. It's a web-based tool. You can more or less adjust these screens quite easily. Also, this starting screen, you do have just a very few information about you here. So you do have a quite powerful and nice collaboration tool where you can start discussions with someone. You can add documents and you can add even data sets and do discussions there. And these data is stored, so it can be used later also to find out what was discussed. And on the other hand, you do have also alerting, so you can define thresholds, you can define rules, and afterwards you can define some way of notification. And as you can see here, you can afterwards also say what kind of notifications you want to see. So that's all generic tools that you get, let's say, with SAC. Not going into detail here, but I just want to show you how, for example, this group, this model looks like. I mentioned it's quite simple. So you do have in this model view, you always have this model structure, calculations, and data management. For us, very important is the model structure and the data management here. So we always have a field for the version that can be mapped basically to S4. You have measures. These measures more or less basically reflect different types of data like P&L change data, changing balance, closing balance, and the different transaction types. You have basically in the you have the financial statement item, partner consolidation, unit function area, and cons unit, and of course the time dimension. And you have for all of this the data management. If you go into the data management, you will find the delivered queries. So as soon as it's loaded, so you will find that we have here this connection to ActoView, which is part of the content, and basically. Going back to the model structure, which is all for the admin, so to say. I will come to the system demo in a second. We have the same for the different dimensions. So here as well, you have the master data that can be loaded, and you have the data management piece where you can also just see that we have already prepared all the imports. After you have defined the connection, you can more or less just refresh or schedule the jobs similar to the transaction data, and then the values are available. So that is the cube piece. And now going back to the planning piece itself. So here, and this is normally just an admin view. So normally the planner will get a notification by a mail or so, or via a workflow, and then he will have a link and can go into the planning. We always have at least three types of stories. These are the front ends. One is for the planning itself, one is for the admin for preparation of planning, and one is for reports and later also for analytics. In the admin piece, you basically can prepare the actuals. You can execute the planning centrally. And you always get from us some demo scenario creation, so you can create sample data for actuals, and you can clear them, and you can create the plan data via the planning functions and reset them as well. So this is something which provides you with a jump start to just be able to use the tool. This is for this simple scenario not that important, but for this big scenario together with integrated financial planning, this is also available in each and every function. And if these two areas are executed together, I think this becomes much more of a value. If I now come to the planning itself, I don't need. So you will find that you have here the planning layout, and this is now I have to go down because this sharing stuff hinders me a bit. So we have here the different tabs. We have the P&L with hierarchy, P&L on a list mode with the partner information, same for balance sheet, for changing and closing, and a consolidated report for financial statement. You always have here the filters for cons unit, for function area, and you do have a function button, which is in this case doing a planning proposal based on the actuals. So you can, of course, expand them here, collapse, and do this in this whole hierarchy as well. So I now execute this function. And afterwards, you will have the plan. And afterwards, you can basically adjust the values. And what is nice that you have in SAC lots of nice things like plus 5% on the note. Then it will be distributed down. You can have minus 1K or something like this. And you can also, when you do, that was let's say like this. So you have these values, and you can also exclude basically from this distribution. You can lock these things and lock the cell. And if you then do this again, then basically this cell will be excluded from the distribution. So lots of things that you can do. And on the other hand, you have this by partner, where you don't have this hierarchy. You have a list view and the partner distribution here. And of course, the chance to also enter on this granularity. For the balance sheet, you have, depending on the attributes of the accounts, a changing entry of the changing values or of the closing values. Depending on what you have entered, you can more or less do the balance carry forward here. And this balance carry forward will also, and to be honest, I did a mistyping in the first layout, so it might be that I mess it up now a bit with this carry forward, because this function will also do some consistency functions between P&L and balance sheet. In addition to that, it will calculate closing or changing depending on what you have entered. Good. So that is basically the changing piece. You have the same for the closing with the vice versa calculation, and the same drill down by partner. And in the end, it comes together in the financial statement report, which guides me basically to the reporting piece, where you get some predefined reports from us. As said, they will be complemented with a visual analytics, but here you will see that you have here a financial statement, a profit and loss financial statement report, also by transaction type or by function area, a few additional drill downs that you can basically use to get some more detailed insights. Good, so that was a bit hurried, but in the end, that is the main information of what I wanted to show you. And yeah, happy to take some questions.
Thank you, Holger. Perfect. So I just had a look at the Q&A tool. There are no questions at the moment. And as we are already at the top of the hour, I would say that we, so yeah, this was the last topic within the second slot of our 4 sessions that we will host today for Finance and GRC. Dear speakers, Philip, Chenshu, Volkmar, and Holger, thanks so much for your wonderful presentations and demos. Much appreciated. Yeah, and dear participants, thanks a lot for attending the session. We will now do a lunch break. And the third slot of this Finance and Risk Day for S4HANA Cloud at the Delta training will continue at 1:30 CEST. So in 48 minutes from now. As you have seen, there are many more interesting topics on the agenda, and we hope that you will join us again at 1:30. Okay, and with this, we can close the session. Goodbye.